Tesla shares posted their biggest intraday gain in nearly 4 years after CEO Elon Musk announced on Twitter that he's thinking about taking the electric car maker private at $420 a share. That would represent a 20% premium over the stock price after the second quarter earnings call. In a letter, Musk said that it would be the best path forward for the company. And the announcement came following an FT report that the Saudi sovereign wealth fund had built around a $2 billion stake in the company. Joining me now is Ross Gerber, CEO at Gerber Kawasaki, who's also a shareholder in Tesla. Thanks so much for joining us. Now, was Elon Musk's tweet the first thing that you heard about this possible take private? And did you think he was serious? Because we know he has a bit of an unusual sense of humor sometimes, particularly on Twitter.
Yeah, well, we were concerned it was a hack because we thought, like the number 420 was kind of funny and it was certainly out of the ordinary to have a bid like this to buy back the company. So, from our perspective, the first thing I did was contact my investors relations contact at Tesla, who then verified it was Elon, and it was his verified account. So once we realized that it was real, obviously we were very happy about it, and the stock market halted the shares, and we've made a substantial profit. So it's been a good day.
So a good day for you then. Now, Mr. Musk tweeted that he's got the funding secured. Do you know who from? Because there was that FT report that I mentioned before, Tesla potentially having secured this $2 billion of funding from the Saudis.
Right, and so we know that the Saudis are involved, and it also fits perfectly within their playbook of what they're trying to do to diversify their economy away from oil-based revenues. So, we saw Saudi Arabia as a very obvious potential partner, as well as China. And Tencent owns 5%, and with the new Gigafactory and Elon, sort of talking about financing the factory there for several billions dollars. So China is probably definitely interested in taking a larger stake in Tesla, as well as something like the SoftBank Vision Fund. So we think that there's plenty of sovereign capital out there to invest in Tesla. So, this shouldn't have been too hard for him. It was probably just a few phone calls.
Now, do you think an LBO is a serious possibility? Because it could be the largest LBO ever, according to Dealogic, and that would mean more leverage on the company, which already has a lot of debt. And we know the analyst community have expressed a lot of skepticism about whether this deal could actually happen. So what are your thoughts?
Well, I think that the analysts obviously have been all wrong about Tesla from day one, are the last people anybody should be listening to about the future of Tesla. So I want to be clear about that. Every Wall Street analyst is dead wrong about what Tesla's been doing and obviously its performance. So the fact of the matter is they can get equity to buy back this public equity. They don't even have to use debt. So if I take 10 or 20% of the equity out of the stock market, remember, they're not going to buy back every share. They're only buying back shares for people who want to sell, and they're going to allow current shareholders to keep their stock. And every shareholder I've talked to is keeping their stock. So they might end up only buying back 10 to 20 billion. Our estimates is 20 billion in stock at the max. And they can easily get that just from equity from the partners like in Saudi Arabia and China. So we see that as actually a small sum of money in this day and age.
So obviously we know Elon Musk hasn't necessarily taken to water with the CEO role in a publicly listed company. He hasn't enjoyed facing criticism from the short sellers, and he certainly hasn't enjoyed answering questions from a lot of the equity analysts on the earnings call. So how much do you think that this move is for the company, and how much of it is for Mr. Musk himself?
I don't think characterizing it as not enjoying it is per se what the situation really is. These are people trying to destroy the company for their own personal financial gain. So as the world grapples with record heat, fires all over the world, and we're trying to invest in an EV clean energy future, these oil-backed short sellers are just trying to destroy the company. And so what he's tired of isn't criticism, and certainly I've been under the same amount of criticism being his supporter. What he's tired of is this plot by what I consider the evil forces of the world to destroy a great company. So I think that's what Elon's tired of. He's trying to protect his mission. He's not trying to protect his ego.
Now, if this take private does happen, do you think it's going to make it easier for Mr. Musk and his team to achieve those production targets without facing pressures from, quarterly financial targets or distracting swings in the share price?
Right, and that's part of it too. What feels the pressure to be profitable right away, but that slows the mission down. So, by being under this quarterly, profit pressure, part of it is good because I wanted Tesla to be a more disciplined company. But part of it is bad because I do want him investing in the future. And I compare it to Amazon because for years, Amazon never made a profit for decades. And if Amazon was in the same position as Tesla, let's say 20 years ago, it might not have made it today. So, we need to give these kind of companies the runway necessary to develop the businesses in the way that will be best for the long term, not the short term.
Now, obviously, a delisting would require a shareholder vote. Would you vote in favor of it, and would you hold on to your stake?
Well, right now I'm not thrilled about the idea of it being a private company and selling my shares at 420 to be a private company. I'm not convinced all of that's going to go down that way right now. I think there's a very high possibility the stock will rally above 420 on the short term and force a buyout of this company at a much higher price. So this game is just beginning, and we intend to protect our rights as public shareholders of what we consider our company that is worth substantially above 420. So our valuation of Tesla is $571 a share, and We're not going to sell anything for less than that.
And so do you think there's any chance that if this delisting does happen, we could then get an IPO further down the line?
Right. It's kind of like Dell. So Dell did this a few years back, and now they're looking to go public again through, sort of this weird transaction. There's a lot of advantages to going public, and there's a lot of advantages to being private, and you really can't have both. So I think Tesla's meant to be a public company. I don't think this is all going to just go down as planned right now, as public shareholders like me want to continue it to be public because I think there's actually more upside for investors as a public company.
So there's a lot more to come from Tesla. Ross, thank you so much for your time.
Oh, thank you.
That was Ross Gerber, CEO of Gerber Kawasaki and a Tesla shareholder. Thanks so much for watching IGTV. I'm Victoria Scholar, and we'll see you very soon.
Subscribe to IG for educational content, company insight, financial analysis and expert commentary.